Hey, what's going on, my friends? In this video, I want to share with you my dividend portfolio and, why I believe you should consider starting your own dividend portfolio. But of course, before we do, don't forget to like this video, subscribe to my new channel here, Make, Manage, Grow Money, and let's jump into it. So as you can see, we are here in my M1 Finance portfolio. I do have a link down below to M1 Finance. I believe they have a promotion right now. Maybe you get like $30 or something like that if you sign up and create your own portfolio. And basically, really quickly, if you aren't familiar with what a dividend is, I mean, you can come to Google, type in dividend, and as you can see, it says a sum of money paid regularly, typically quarterly, by a company to its shareholders out of its profits or reserves. And then over here, a dividend is a distribution of profits by a corporation to its shareholders. If we jump over to Investopedia, you can see it says a dividend is a distribution of some of a company's earnings to a class of its shareholders as determined by the company's board of directors. Common shareholders of dividend-paying companies are typically eligible as long as they own the stock before the ex-dividend date. Dividends may be paid out as cash or in the form of additional stock. And the key takeaways: a dividend is the distribution of some of a company's earnings to a class of its shareholders as determined by the company's board of directors. Dividends are payments made by publicly listed companies as a reward to investors for putting their money into the venture. Announcements of dividend payouts are generally accompanied by a proportional increase or decrease in a company's stock price. So hopefully that makes sense. I mean, essentially, as it says, dividends are payments made by publicly listed companies. So, think about Facebook, think about Google, think about Amazon, whoever you can, think of that is a major company that's out there. I can almost guarantee it's a publicly listed company. Not all companies, of course, but a lot, pretty much any major large companies, like I was saying. And as it says, a reward to investors for putting their money into the venture, meaning if you are investing in them, they're rewarding you by showing, their appreciation that you're saying, hey, here's my money that we're going to, support you guys with. Take, that's your hard-earned money. And as a, reward, a way of showing their appreciation, so to speak, they're giving you a dividend payment, whether it's, as we saw before, monthly or quarterly. Generally, they are quarterly, as you can see right here. So we're over here in M1 Finance again. I do have a link down below where you can create your own M1 Finance portfolio. The thing I love about M1 Finance is the fact that they provide fractional shares. Fractional shares is a way that you don't necessarily need to have the full amount of money for a particular share to invest in that company, to own, to have any kind of ownership. So if, for example, Tesla might be too expensive for you because it's $693.73. You might be like, I'm just starting off with investing, or maybe you have enough money to afford that, but you still just don't fully believe in Tesla to that extent where you want to throw all your money behind them, or, whatever the reason might be. Well, with fractional shares, it allows you to say, I only have $200. Well, you can invest $200 towards one share of Tesla using a platform like M1 Finance that offers fractional shares. And so we are here inside of my dividend pie, my dividend portfolio, which includes companies that are publicly listed, that reward me with a dividend, on a regular basis. Again, whether it's monthly or quarterly. Usually quarterly. I think some might even be I don't think they're annually, but maybe there might be some that are just annually too. I could be mistaken there. But as you can see, we're currently in my portfolio that has, if we're looking at it right now, just over a day, it's Saturday, so the market's obviously not open, but over one day, I'm currently up 0.62%, which amounts to $4.78. And, earned dividends, 64 cents. Not too bad, right? Now let's jump over to 1 week, in which you can see it has improved a bit. Went up to $22.22. Returns 2.96%. 1 month, it's gone up a bit to $29.87. Return 7.83%. We go to 1 quarter, it's gone up a bit to $32.72 that I've gained, that I've earned in profits, and that amounts to 11.57%. If we click on these little guys, it says money weighted return of this investment gain. It says combination of all market capital gains and dividends earned. And if we go to 1 year and all time, which this account is a new account, if we scroll to the beginning of the calendar, you can see I started it last month on February 1st. Now, I unfortunately ended up getting sick and kind of having to lay low last month. So this, I'm just starting off with making this channel, really jumping into this channel, jumping into making this kind of live, I guess you can say, tracking this journey of the dividend portfolio. But as you can see, February 1st is when I opened this account with $100, and we're currently sitting at $781.71. And so some of you might be wondering, how did you get there? Well, first and foremost, it's I look at this as a way of building up just another stream of income, down the road. And what I'm doing is, this is like, I'm looking at this kind of like a job or something I'm doing, and I'm building up my that company's pension plan or retirement or whatever. And by chipping in a small amount right now towards this dividend pie, this dividend portfolio, I'll hopefully be able to build it up, get it nice and big, where in the future, my dividends, my earned dividends that I'll be getting back from it, won't be just $1.02. It'll be, maybe $10,000, maybe more, maybe a little less, who knows? But the goal is to have some money coming to me, along with, not only your money going up in value because of the stock price, because of the share, but also that additional stream of income from the earned dividends, that dividend aspect, which again, the gain is a combination of all market capital gains and dividend earned. So this does include this right here, but the market gain is specifically focused on the share price aspect. So if you buy Tesla at the $693 mark and it goes up to $700, well, you just gained $7. That would be your market gain. But Tesla doesn't pay dividends, so you will not get any kind of earned dividend from Tesla. That's the trade-off. Generally with companies like that, the growth aspect of the market gain, how much your stock price, your share, can go up. So from, it can go up from $1 to $10, whereas another one like Tesla might go up from $1 to $100, but they don't pay dividends. The one that goes $1 to $10 pays dividends. So there's balances, and it's a trade-off from those numbers. I'm just exaggerating, of course, but I'm hoping this makes sense to you guys. If it does, definitely like this video so far and subscribe to the channel. This is a new channel, and I just want to throw content out there that's focused around things that I've I care about, that I'm passionate about, that I want my friends and relatives and, you know, other people out there that are hungry to learn about, that may not have come across another source that has been able to break something down in a simplified way that makes it easy to understand and digestible, if that makes sense. Because I know oftentimes some of these things can be intimidating, it can be overwhelming. And before I actually jumped into investing, I was in that same position. And, you know, I know some people are like, oh, you're running with the wave right now. And, you know, I would say in terms of me stepping my game up, kind of, I definitely got motivated over the past year or two because of everything going on. But yeah, I mean, I've been investing, you know, and you'll see in a future video, one particular company that I bought and I sold. And to this day, I keep kicking myself in the butt. Even now, while that company has dipped a bit because of this recent dip, this little setback or reset, whatever you want to call it, I still haven't, I still won't buy it because I know what I used to own it at and how far it's gone. And I'm like, it's driving me crazy. If I had hair, I'd be just pulling it out. Like, oh my God, it's not Tesla. I'm sure all you guys are like, oh, it's Tesla, clearly. No, it's not Tesla. So you know, I'll talk about how it made this jump here as well. But the first thing I want to point out is with my particular dividend portfolio, before we jump into the companies I chose, you know what, maybe we'll just jump into these companies really quickly. So I'll let you guys see what I currently have in my dividend portfolio. And I'll make another video maybe explaining all of these companies because I'm sure some of you will know most of them. And then there might be a few that you're not familiar with. First, as you can see, is Newt, Newtek Business Services Corp. And, you know, currently have $83.54 is its current value. And we're up quite a bit on this bad boy, 48%. Yeah, we got Chase, JP Morgan, again, currently up 15%. We got Realty Income Corp, currently up 15%. We got 3M, currently up 10%. We got AbbVie, which is currently up 7%. We got AT&T, which is currently up 6.37%. Johnson & Johnson, which is up, you know, 5.5%. We got Coca-Cola, which is up 5%. We got Pepsi, which is up 3.8%. And then we got Verizon, which is up 2.14%. So clearly my portfolio right now is currently up. We're sitting good, sitting in a nice position, a nice place. And again, the whole gain, being the market gain for how much the share prices have gone up, and then my earned dividends, full dollar, that payment that's coming quarterly or monthly, is up as well. And the total is $32.72 is where we stand today, in which this portfolio I started on February 1st, 2021 with about $100, I believe. Yeah, $100. And some of you might be wondering, you know, why did I choose these select companies? Or you might be wondering, you know, what's the point of having this portfolio? Why not just put all my money behind Tesla? I mean, I'll make another video explaining why I decided to run with these particular companies. And I do have Tesla in another portfolio. So that's one reason. The other reason is Tesla doesn't pay dividends. So they couldn't be in something like this. And I wanted to create a portfolio specifically focused on dividends that, again, I can start to just generate money on this. You know, this is something I'm chipping away towards on the side. And it's not my main portfolio. It's not like my main focus and attention. But if you get an extra $25, which is what I did with this, there you go. See that jump? About $25. Watch it jump up after we get the little dividend payments. And the fluctuation of the market, of course, as well. And then it goes up another $25. So what I'm doing with this is contributing towards this on a weekly basis where I just add $25. You don't notice that. That's something that's a small amount. Hopefully, if you're in a position where that's too much for you, then you definitely want to subscribe to this channel, because that is what I'm trying to do with this channel, where something like this should not be a burden on you. It should not be, if you're able to watch me right now, watch this from your phone, from a computer, wherever. That means you have access to a computer. It means you have access to the internet. It means you have access to, you can see, you can hear. There are ways to make money in which it's like we're overcomplicating some of these things, and that's the goal. I want to try to help simplify a lot of these things, or just shed light on how easy it is, because until I kind of embraced some of these things, it was like overwhelming. It was too much. It was daunting. It was like intimidating. It was not what I came from. So it wasn't something that I necessarily thought was for me. Maybe, I don't know. But again, once you get, and I've seen, money. I've grown up around it, fairly close to it, I should say, so to speak, but not directly, if that makes sense. But again, once you start to get that ball rolling, then you're like, wait a minute, okay, you get that snowball effect, and the ball just keeps rolling. You get the momentum, you want to run with it. And, it's just one of those things. You realize it's not as difficult. It's not as hard. It's not as intimidating. It's not as scary as you might have thought it was. So again, if you can contribute towards something like this, $50, $25, $10 every week, it's going to start to add up more and more. And then with something like this, where it takes that jump, $500 jump right there, well, this is when the market was starting to the market was kind of starting to crash, at least for a lot of companies. They were correct. So there was a dip. And what you want to try to do is, it's impossible to kind of time these dips where they're going to be at their very bottom, but at least if it's dropping and it's below kind of where these prices are usually at, well, it's a good time to, with a portfolio like this, where it's something you're not going to need this, you're not touching this money, it's long term, over 10 years, over 5 years, whatever it might be, you don't need it now. And so when the market drops like that, that's when you want to buy more. You don't pull your money out with a portfolio like this. There are different kind of portfolios where that might be the case. I know some people say never, got to have strong hands and never pull your money out. Well, it depends what kind of portfolio it is. So it depends what your goal, what your intentions are with that particular portfolio. With something like this, for me, it's long term. Again, I want this to be something where down the road, I'm starting to get a payment from my dividends, my earned dividends, where it won't be $1, but it would be $10,000, or it would be $1,000 every week or every month or whatever. That's the goal. And, that's going to take some time. It'll probably be more than me needing just $25 payments a week. But, we can start here, get that ball rolling. Maybe, I come across a nice wad of cash or whatever, and instead of me doing a $500 contribution, I can do a $5,000 contribution all of a sudden. And that pulls this up a lot more, which will increase my number of shares that I'll have, which will increase the earned dividends. So I hope this makes sense to you guys. I hope you guys are kind of seeing the power of dividends and why you should consider creating your own dividend portfolio. Again, I'll start to try to make some more videos talking about, dividends, different other dividend companies that pay dividends, and why, I decided to run with these 10 companies. Some people would say, oh, that's too many. You don't want to have that many. I think this is fine. For me personally, it's diversified where it's balanced. If something crashes, it's okay. But yet I can still reap the rewards of my contributions, of my money being invested in them without, again, worrying so much about the risk component. But if I did have half as many companies, I would have more money behind, just 5, in which who knows what 5 I might have in this amount of earned dividends. Might be more, might be less. Because again, the other thing you have to remember is some of these companies pay dividends quarterly, whereas others pay monthly. So what we're seeing right now probably is only all monthly. And maybe there are some quarterlies by now, but No, no. Well, we're just starting this in February 1st, so I don't think I would have any quarterlies yet. I think it's only monthly dividends in here. So that's what I'm saying. So it's pretty exciting. It's pretty cool to be able to build this up. And now that I'm doing it here with you guys, I would love, see what you guys think. What are you thinking about my portfolio? You might not be familiar with all of these companies. Maybe there's someone in here that, you're like, hey, I just had a Coke. I love Coke. Whatever it might be, feel free to leave a comment, subscribe to the channel, like this video. And like I said, I will have a link down below where you can create your own M1 Finance portfolio, in which I love M1 Finance. It's not my only investing platform that I use, but it's the only one that I use that offers fractional shares. So I use them for this portfolio and actually use them for my Roth IRA as well. Yeah, I'm a fan. I like M1 Finance. So like I said, I'm going to keep it moving. I hope you guys found this video helpful. This brand new channel content, I just kind of want it to be money focused, if that makes sense. So starting a business, side hustles, investing, grants, loans, money, because that's what we want to focus on at this time. Making money, growing your money, but also most importantly, managing your money. So yes, in the mix, there will be debt videos, there will be budget videos. I know a lot of you aren't so interested in those topics, but we got to go there. I'm sorry. We can't really be jumping directly into these videos without exploring some of those other topics as well. I'm jumping right into this, of course, because I enjoy it, I love it, and I want this channel to be something I'm enjoying and I'm loving. So I think let's have some fun with it and jump right into the things I enjoy, but we do have to go down those other roads as well to make sure we're covering all ends and building a nice, strong foundation that will allow us to actually support, this real money that's going to end up hitting us in the very near future. All right, my friends. So on that note, like I said, like this video, subscribe to the channel, and look out for the website as well. I got a brand new website coming. Yeah, growmoney.com, baby. All right, so I'm going to keep it moving, but you guys already know. I'll see you in the next video. Peace.